Good morning, everyone, and welcome to Ducker Frontiers webinar, Navigating COVID-19 and Post-Pandemic Scenarios for Colombia. My name is Marco Parasso, and I'm a Client Relationship Manager for Latin America at Ducker Frontier. Prior to joining Ducker Frontier, I worked at a Washington, D.C.-based think tank focusing on Latin American economics and an economic advisory firm in Buenos Aires. Before we start, since some of you may be new to Ducker Frontier and the company, I wanted to take 2 minutes for a very quick overview of our company and who we are. At a glance, Ducker Frontier is a market intelligence and advisory firm. We have tailored solutions to drive growth for clients across the B2B, healthcare, consumer, and technology sectors. Our dedicated team serves as advisors to our clients by delivering the market and industry knowledge they need to succeed at all different parts of the business cycle. Our ongoing research paired with custom solutions and our transaction support services provide clients with timely and actionable insights so they can adapt and win in evolving markets. Our company is headquartered in Washington, D.C., with offices in Troy, Michigan, New York, London, Paris, Berlin, Singapore, Shanghai, and Bangalore. For more information, please visit www.duckerfrontier.com. So with that very brief overview, it is now my pleasure to introduce you to our presenter, Ramiro Salgarañez. Ramiro is one of our senior analysts for the Latin America research team and has driven the studies behind the scenarios for today's presentation. I'll pass the word on to him.
Thank you, Marco, and good morning to you all. It's a pleasure to be joining you this morning and presenting our latest outlook on the Colombian market. As Marco mentioned, I'm the senior analyst on the Latin America research team. I've been with the company for about 2 years and I've had the opportunity to cover many regions, including the Andean region. And it's really a great pleasure to be able to bring you our latest view on the Colombian market here to give you a little bit of an idea of what we will be going over today. And first, we'll kick off the presentation going through the framework that we're using to analyze the current coronavirus as shock to the Colombian economy, right? And where Colombia fits in within this framework that we've developed. Then we'll dig into Colombia's unique challenges at the moment, right? So balancing pressures from not only the coronavirus shock, but also the oil price collapse, the risks of social unrest, resurfacing, and getting more into the fate of the government's reform agenda after the coronavirus pandemic is over. So all of these factors will be very important for Colombia's trajectory, also in the medium to long term. And then we'll dig into our economic forecasts and scenarios and close it off with some business implications and actions to take, as well as some Q&A at the end.
Terrific. Thank you, Ramiro. Thank you for joining us today. A lot has clearly happened, and as mentioned, we'll be using a very easy polling software where you can answer the questions we have today. Please log into pollev.com/dfrontier560. All polling is completely anonymous. However, for the name field, please feel free to enter your industry, that being B2C, industrials, IT, other, or no company. Now, with all the logistics out of the way, let's get started.
Perfect. Thanks, Marco. And I'd like to kick us off right away with a polling question to sense how firms, individuals in Colombia are perceiving the current moment. And so let's start with this one here. By how much do you estimate COVID-19 will impact your revenues this year in Colombia? So you should be able, there's a link at the top, by the way, where you can log in. It's at pollev.com/dfrontier560 on your mobile device. So I'll give just a moment here for answers to come in. All right, so it seems like the majority here are falling in that revenue to fall short of original target by 11 to 20%. A few more in the positive territory of surpassing original targets. Obviously some industry variations here that we're seeing. But the majority there with a hit to revenue is about 11 to 20%. And I think over time, firms are becoming more and more confident and certain in predicting the kind of hit that will materialize from this to revenues. I think there was a lot more divergence when we were asking this question early on across Latin America. Now we're starting to see a bit more convergence here, and here the majority in that 11 to 20% range. So now I'd like to switch gears to another final question before we kick off is, by which year do you expect your total sales in Colombia will return to 2019 levels? And this is a question that we'll try to answer throughout, more from the macroeconomic perspective of when we see Colombia's economy returning to those pre-COVID-19 levels of economic activity. So a lot more variation here so far, and it would seem like the majority already either by 2021 or 2022. Just to give you a little bit of insight of what we expect on the economic front, we're thinking the Colombian economy will not return to its pre-COVID-19 levels until 2022. So with no further ado, I'd like to get us started with exactly understanding how this shock will materialize and what the impact will be on the Colombian economy. So first off here, what I would like to do is introduce our framework for Colombia. And this is really going to come down to three main ways in which the coronavirus shock impacts the Colombian economy, right? One is going to have everything to do with those social distancing measures that we've seen come in place, right? So the length of these measures, how whether they reoccur, and how strict they are across the board in Colombia. The second is going to be how much is the government spending, right? And this is going to be all about trying to mitigate the economic damage from the social distancing measures, which we know are already leading to a lot of structural economic damage in the Colombian economy. And the third here is the timing of treatment and a vaccine for COVID-19, right? And this is obviously going to be very important for the confidence story, right? For consumers and businesses to be able to see a light at the end of the tunnel of this crisis, and for us to start moving more officially into a new normal following the coronavirus pandemic. So to start us off here with the first point, we've adapted this framework from Tomás Puello called the hammer and the dance, which is a good way to think about the phases that governments are currently going through as they try to mitigate the current spread of the coronavirus and move into the new normal, right? So first, here what we can see is that we've been in this current period, right, which is called the hammer, where you're on implementing the most strict social distancing, quarantine measures to try to flatten out the case curve of the coronavirus as much as possible, and then move into what Tomás Puello calls the dance, right? And in the dance, what you're trying to do is mitigate the spread of the virus at the lowest economic cost, right? So starting to reopen your economy without having the virus significantly spread again. But as we know, not all countries in Latin America are going to be able to dance the same way, right? There's going to be different dancing skills that are important, and that's why we've identified two different types of dances. One is here the bachata dance, which is a slow, more ineffective dance of containing the virus, one where you could likely see social distancing measures persisting for longer and some of those more draconian measures lasting. And the other one is the samba, which is more of a fast, effective dance, which comes with a bit more intelligent management and social distancing measures into the new normal. But of course, there's also the downside risk, right? Where you could once again have cases spike significantly as you did during the first wave. And then you basically have to go back to those hammer measures, which we know cause so much structural economic damage to the economy, leading to a deeper recession and then a weaker recovery thereafter. So what are the key things that make you a good dancer, and how does Colombia fit into this metaphor that we're using? Essentially, there's four main things. One is going to be how early did you react? So how early did you close your borders? How early did you start implementing social distancing measures? And here we saw that the Duque administration in Colombia did act boldly from the start, and it appears to be paying off. Then another key important point here is, are you dancing with the right tempo, right? And what does this mean? This means, are you reopening at the right rate, right? That you're not reopening too quickly and having risk cases rising too rapidly, and then having to go back to some of those more strict social distancing measures, right? The second point here is good information, right? And this is all about testing. How much testing are you doing? And to be able to identify where you're having outbreaks and be able to take more intelligent social distancing measures that are not those widespread measures that we've been living with across many countries, right? So are you testing to be able to identify where outbreaks are happening? And then perhaps you can close off just a neighborhood instead of an entire city or an entire state, for instance. And then you can also do smarter social distancing measures, right? So you can do things like tracing of cases. So for instance, this is what's been very successful in places like South Korea and Singapore, where they've been able to do the case tracing, where you're able to identify people who have tested positive, track others who they've come in contact with, and recommend that those people isolate as well. and that way prevent the spread of the virus. So testing is extremely important here for the dancing skills, and we'll see this is a point where Colombia could definitely be doing more. The third is all about your healthcare infrastructure. Did you build enough capacity in your healthcare system during the hammer period in order to prevent the collapse of your healthcare system if you start to have cases resurge as you move into the dance? And then the fourth point here is whether you have endorsement from local authorities, right? And a kind of cohesive strategy from the national to local level, that you don't have a lot of different voices giving many different recommendations that could make your social distancing less effective, and then your reopening less effective as well. And here we've seen that Colombia has had a bit more effective stance, especially relative to other markets in terms of managing this from a national to local level, although there's been some differences and some points of contention at times between local and federal and this central government. So here, looking at the cases and so far the progression of curves across Latin America and where Colombia currently stands, it would appear that Colombia is more in this samba dancer group, right? The curve has not significantly risen as we've seen in other countries. Colombia is entering this dance phase from a much better standpoint in comparison to other peers, for instance, like Brazil, Mexico, or Peru, for instance, that are entering before having really reached the peak of cases, which makes going into that dance a lot more difficult, right? Because you could have cases resurge much quicker as you start to reopen. So Colombia here really has been in a better position with in line kind of close with Argentina of the major markets here, moving into that dance phase from a better standpoint. And this is a good proxy that Colombia will likely be more in this samba dancing group, but there's obviously some key risks to monitor. Here, what we can see, and we're tracking constantly social distancing measures being implemented across LATAM. This is something that our clients are constantly receiving. And we can see where Colombia was essentially during that hammer phase, during the peak period where we had the widespread national lockdowns and quarantine measures. And now Colombia has been moving towards the dance, right? Eliminating some restrictions, some differences across different departments, of course, within Colombia and municipalities, but moving more and more towards the dance, but it's moving cautiously, right? It appears to be dancing at the right tempo. And to stress that point here, what we can see is different mobility data across Colombia. So we can see clearly the lockdown, the quarantine measures were effective until now, right? We remained and saw very little mobility across the board in many of these different categories. And we're slowly moving towards reopening and normalization, but not at an abrupt rate like we've seen in other markets, which of course create that risk that if you do have cases, more cases than you think you might have, you could have a spike again as you start to go into that dance phase. And that is one point that I want to stress here with Colombia, that there could be potentially more cases than what we currently see, right? Because we have not done enough testing to really be sure of exactly the kind of outbreak that we're dealing with on the ground. It has been higher than some other markets in the region, higher than Brazil, Argentina, or Mexico, for instance, with here 7,129 tests per 1 million people. But we're not seeing sufficient tests to really be able to have a full grasp of how bad the outbreak really is as we're moving towards reopening, which creates some risk. But then also we don't have sufficient tests as well to be able to take some of those more intelligent isolation and social distancing measures that I was mentioning earlier, which come with having more and more information that allow you to do more targeted measures rather than those widespread measures across departments and the nation, right? And so if we compare here with other countries in the region, for instance, Chile or Peru, Colombia is significantly below. Of course, those countries are having worse outbreaks, so you would expect to see more testing, but we know that this value is still too low for Colombia to really be able to do some of those smarter social distancing measures moving forward. And to kind of stress that point here and look at the differences across departments, what we can see in this heat map on the left-hand side is the number of COVID-19 cases per 1 million people across departments in Colombia. And then here on the right-hand side, the number of tests per 1 million people. And what I want to stress here is that there's many areas where there's divergences here that create risks, right? So for instance, in Bogota, where you're having, in other regions here in yellow, where you're having moderate outbreaks of the coronavirus, there are many that lack in testing significantly, right? So these areas are areas that are prone to risk because there could actually be worse outbreaks than what we were actually perceiving through the data so far, because we're lacking in testing. And then there's many areas across the board in Colombia that are not doing sufficient testing, which makes doing more of those smarter social distancing measures and more targeted measures more complicated as we move forward, which means that we could see in some areas potentially the recurrence of some social distancing measures, which we know come with so much economic damage. The other point here I wanted to stress was the healthcare capacity front, right? And here what we can see is that there's many departments in Colombia that are currently around 50% of their healthcare capacity when we look at the number of ICU beds available. There are some that are already in this red territory, more alarming levels, such as Chocó, Atlántico, Sucre here, which raise alarms already as they move towards reopening, have to be more cautious in those departments. But also here, there is the risk, right? That as you start to reopen, you have cases resurge, and many of these healthcare systems could quickly become overwhelmed, which means the government needs to continue investing in improving that healthcare infrastructure so that it does not have to go back to a lot of those strict social distancing measures, and we do not see a collapse of the healthcare system. So far, things appear to be going well. We have not seen the dire situations play out in Colombia as we've seen in other places, but this is another point of alarm and another point that needs to be closely followed to make sure that Colombia is moving into that dance phase more successfully. And we know that during this dance phase, governments are going to have to spend a lot, right? Because we have these social distancing measures, many of which are going to persist for longer, and we're trying to mitigate the economic damage from these measures, right? But as we all know, Colombia was starting this situation from a much more challenging fiscal position. Already, we were talking before the crisis about Colombia potentially losing its investment grade rating, and because the government's fiscal plans were going to be challenged already in a modest oil price environment. And now there's essentially a lot more risk here with all the new spending that is going to have to be done in order to offset some of the economic damage from the coronavirus pandemic. And at a time where your revenues are significantly falling and because of the paralysis of economic activity and oil revenues falling, all these things which are going to create a lot of pressure for the government at the moment and create more risks on this front of Colombia losing its investment grade, right? So if we go back to the government strategy prior to the coronavirus pandemic and managing its resource constraint, there were a few levers that it had in order to manage that resource constraint, right? One would have been reduced spending, which obviously is no longer going to be possible with the coronavirus pandemic. It's actually, of course, the opposite situation with Colombia having to spend significantly above its current capacity. The second point here, increasing revenues, which is going to become a lot more challenging too, right? And this was the government's bet prior to the coronavirus pandemic to have more investment in employment, which will no longer be the case. More oil royalties after the oil price crash will no longer be the case either. The privatizations with such low asset prices is not an option as well at the moment. So really just a few one-off revenue sources from different government funds that are available, but it's not going to be enough for the kind of spending that Colombia will be undertaking and the revenue shortfalls that it will be facing, which really only leaves one option here, right? Which is relaxing fiscal targets, essentially increasing the amount of debt that Colombia will have moving into the future, right? So to stress some of these points, on the reducing spending front, we know that Colombia is not spending as aggressively as many of its other peers. It has continued to try to maintain some fiscal responsibility and preserve that investment grade rating and fiscal credibility moving forward, but it's still spending significantly above its means, right? So this is about 3% of GDP for Colombia. That is significantly lower than what we're seeing in many other countries in Latin America, where spending is starting to get higher and higher and closer to 10% of GDP. If we compare it to other more developed markets, for instance, the US, where spending on the fiscal side is expected to get as close to 20% of GDP. But even this amount of spending that is being undertaken will not be able to offset the kind of structural damage that we're seeing, especially in Colombia, where we're seeing relatively lower spending being implemented so far, right? And to stress that point, what we can see here is how much job loss we've already faced in Colombia, with about a fourth of those employed already losing their jobs from March to April, and across many different industries here, right? And we're going to see different kinds of recoveries. Obviously, some of this employment will start to come back online as Colombia goes into that new normal, starts reopening, but not all of it will quickly bounce back, and we will have much structural damage left on the employment side, especially because if we look at the other side of the equation too, right, which was more investment and businesses' ability to reabsorb and rehire a lot of the employees that they're currently letting go right now. We know that business confidence is pretty much at all-time low, significantly low levels, reflecting that many companies are facing very challenging financial positions, right? That they cannot survive, many of them, without their normal cash flows for more than a couple of months, which means that we might see significant numbers of bankruptcies materialize and companies exiting this crisis in much more fragile financial positions, meaning that they cannot rehire everyone that they're letting go. And we'll see demand really take a hit here for some time. So industries are going to suffer across the board. Many of them which are already starting to feel these pressures as we look at Q1 2020 figures here, already starting to show that trend. And of course, this was already with January and February being much better than what we saw in March. But as we look at Q2, which will be the worst quarter, we'll see more and more pressures here, right? So the government's bet on having more revenues from investment and employment is obviously no longer going to be the case, which leaves us with that final option, right, of significantly increasing debt. And that's what you can see here on the left-hand side. If we look at the government's fiscal deficit expectations that we have here at Dr. Frontier, so significantly missing its original targets. Obviously, these have now been tweaked to give the government more space to spend at the moment and increase the amount of debt that it has, but we're already dealing with severely high values of debt, right? So about 50% of GDP in Colombia, which are likely to get closer to 60% following all of the new spending and revenue shortfalls that we expect from the current crisis, which although now looking at how do you confront the situation, the Duque administration has been saying that they will not pursue tax reform during the pandemic, but in the post-pandemic world, this becomes a lot more likely, right? If we look at how much revenues are being lost at the moment, the kind of fiscal situation that the government was facing, how we're just one notch above losing the investment grade rating, the government's going to have to at some point give more credibility that it will be able to fill those financial gaps that it has, which makes another tax reform in the future a lot more likely and potentially rolling back some of those benefits that we saw in the last Ley de Financiamiento at the end of 2018. So I would like to stop here and ask and see how you all on the line are currently perceiving the situation of whether you expect corporate taxes in Colombia to increase in the coming years. And for anyone who joined in late, here you have how you can answer the polls. By the way, that is, you can go to pollev.com/dfrontier560, and you will be able to answer these polls live throughout. So it does seem that 75% here, 69 now, either substantially higher or somewhat higher. And I would agree with this assessment, especially if we think of maybe some of the tax benefits from the last tax reform starting to be rolled back, or potentially new taxes being created or increased to try to offset some of the current pressures that we're facing right now in Colombia. The government will present its new fiscal plan at the end of this month, which can shed some more light on this front. It'll be very important to give kind of credibility to its plans to credit rating agencies in order to sustain its investment grade throughout this year and into the next year. But I would agree here with this current assessment that we're seeing. So to kind of bring this all together, we can see where Colombia kind of stands out in the region and this framework that we've developed. Essentially here on the x-axis, looking at what kind of dance Colombia will be doing. And as I mentioned, we do think Colombia will be a bit more effective here based on all the components that we've analyzed so far at doing that samba dance, but it will have moderate but insufficient spending on the fiscal front, especially compared to other countries here where we see a bit more aggressive spending, which can help to mitigate some of the structural damage. But of course, being in the samba group is a much better position than being in some of the more downside, riskier areas of the dance, or having potential large secondary outbreak, right? So Colombia definitely stands out here more for its dance than for its fiscal side, and we do expect this to lead to a sharp recession still this year, but Colombia will likely have one of the better recoveries in the region, as we'll see. But there are other scenarios that could play out here, right? If we double click into this framework, there is a scenario that potentially Colombia could be more in this bachata group, having cases resurge that goes into the dance, having to re-implement a lot of the social distancing measures. That's definitely a risk to monitor. And there's also the case, which is the other risk, which is a real risk for many countries across the board in the world, that you have a secondary large outbreak, right? And then you have to go back to those hammer strict measures leading to a sharper recession and a slower recovery thereafter, right? But our bias is towards Colombia being in this samba group here with moderate but insufficient spending across the board. And then the final factor I wanted to mention here in the framework was the vaccine, right? And obviously we're not vaccine development experts here at Dr. Frontier, but we've been following all of the leading science in this sense to get an idea of when we might get a development on this front. We know that with Ebola, it took 5 years in order to get, that was a record before, in order to get a vaccine developed. With all the resources being put towards the coronavirus pandemic, all of the focus from governments and companies around the world to try to develop this, we are a bit more optimistic that we will get a vaccine in our base case by Q4 2021, but with moderate access. And why do I say moderate access? Because we know that Colombia does not have the industrial capacity to be able to produce these vaccines on a mass scale locally, which means that Colombia will have to get in line, right, to access these vaccines. So even by Q4 2021, with 25% access, we're not fully into that new normal yet, but it will be extremely important, especially to start boosting more and more confidence for investors and consumers that there is clearly an end in sight to this crisis, and we will be fully moving into that new normal officially, right?
Great. Thank you so much, Ramiro. This is super helpful to understand both the framework and the analysis that you've provided. So it seems evident that Colombia will fare relatively better than many of its peers in the region to contain the pandemic. However, structural economic damage, unfortunately, does seem inevitable, leading to a slow recovery. And so we know that Colombia has many other unique challenges at this moment that will need to be confronted at some point. And I'm sure that many of us are curious to know how all these challenges will evolve amidst COVID-19 and to understand the new risks that have surfaced. And so with that, for instance, the potential for social unrest to resurface on the heels of the national strike last year, or the impact of the oil price crash and the fate of the government's reform agenda following the crisis. And so I was wondering if you could tell us a little bit more about where Colombia was, where Colombia is headed, and what are the new risks and challenges that firms need to understand from both an external and internal standpoint?
Sure, Marco. I think there's a lot to definitely unpack there, but to kind of set the scene a little bit of where we were prior to having this coronavirus crisis, right, and the second oil price crash, we were already seeing that Colombia was kind of reaching the peak of its current growth cycle because of so many structural problems that were limiting Colombia's growth potential really above kind of that 3% threshold. But what I wanted to stress here is that this disruption that we're now seeing to Colombia's business cycle is going to be entirely different to any of the ones that we faced in its modern economic history, right? We're not talking about a shock that's going to lead to moderate or weak growth. We're talking about a shock that's going to lead to Colombia's deepest recession, what we see in its history, right? That's a combination of both these factors, and we can see that in how much our outlook has changed and how quickly, right? This is our outlook that we had for Colombia prior to the coronavirus shock, and as you can see here, a lot of the story was about stabilizing growth. A lot of orange here on the right-hand side, reflecting these trends of kind of growth starting to ease and start stabilizing in that 3% levels I was mentioning. But now it's entirely different, right? What we can see is this picture has changed completely. There's a lot of deep red here now on the right, both from the external and on the internal front, both from the trade environment and global economies facing this global shock at the same time, from oil prices too, reaching significant lows this year, as we all know. The global financial conditions are really the only one here that remains in green, and this just has so much to do with central banks injecting so much liquidity at the moment into markets. But as we know, this is not going to be sufficient to offset all of these pressures here that we're seeing in deep red, right? Then we have the political and regulatory uncertainty, which, as you mentioned there, Marco, we'll touch on our expectations for social unrest and that situation the government was facing prior to the crisis. And then domestic demand, obviously here as well in dark red as a default of all the social distancing measures that we were mentioning, which come with such economic damage, right? So to start us off here on the external front, looking at oil prices, right? So this oil price collapse, which began with the Saudi-Russia oil price war, and then were kept significantly low with depressed demand globally. Our view has been that prices would recover slowly as you start to have economies start to come back online slowly, and as you continue to have those OPEC plus adjustments materialize. But we're talking about a slow, gradual recovery. We've seen prices bounce back a little bit in the last couple of weeks, but really in the best of cases, just returning to those modest oil prices that we had prior to the oil price shock. And really, this is going to take a significant hit to the economy and to the government's coffins as well, right? If we look here at how this has materialized so far, we saw that in April, oil exports in Colombia fell by over 50% already. Much of this having to do with how much oil exports have fallen. Obviously, oil exports being one of the key and most important exports for Colombia, representing about 40% of its export basket. So that all is going to translate into significant pressures already this year and into next year too, right? If we think of how much the government's going to depend on these inflows for its fiscal situation and fiscal plans into next year, there's going to be significant pressures there, and pressures this year as to how much investment we see flowing into the key oil sector as well, right? And then another important component here, obviously tied and related to oil prices, is the value of the peso, right, which we've seen significantly depreciate this year, recover some in the last few weeks, especially with oil prices bouncing back, starting to have risk appetite internationally start to improve, having flows return a little bit to emerging markets. But the point I want to stress here is that we do not think the peso is going to return to those pre-COVID-19 levels, right? Because we are having so much structural damage on this front, a lot of more fiscal risks moving forward, that we think are going to keep the peso at a lower level, right? And you can see our average here expectation for 2020 of 3,680 pesos per dollar, and then just slightly appreciating a little bit more into 2021, reaching 3,600 pesos per dollar. And here you can see some of the main factors that have helped to weaken the peso this year and what is helping sustain it at a little bit more of this positive trend that we started to see in the last few weeks into the second half of the year. So I'd like to stop here because I know that this created a lot of pressure for firms, especially earlier on in the year and now, is whether you are planning to adjust your pricing and or collection process to alleviate the FX burden borne by either your customers or your distributors in Colombia. So it seems, and this is what we've been hearing mostly from our clients and firms so far, that most will absorb part of the FX appreciation since January. Seems like 25% saying they will absorb most of the FX appreciation since January. So a mix of those two main groups, right, of either passing on some or absorbing all of this FX shock, obviously creating a lot of pressure for businesses in Colombia at this moment. So another point I wanted to mention now on the external front was the supply chain risks, right? And what I'm showing here is how much Colombia imports for its manufacturing sector from different countries around the world. And we can clearly see that there's two main exposures, right? One was China and the other one is the US. Now we have China coming back online, but there's still many bottlenecks there from China being offline, so much of its production taking a hit while it was dealing with the coronavirus pandemic. Now we're starting to see that situation normalize a bit more and more. But there's still risks that we can continue to see supply chain disruptions, especially out of the US, which is still very much dealing with the pandemic at the moment. And there's risks that we might see more factories start to come offline there. And there's risks as the US starts to try to reopen too, that could create production hurdles within Colombia. But now I want to switch gears a little bit to the internal factors, which I know are very top of mind for firms right now. And starting off with the national strike, right, and the social unrest that we saw at the end of 2019. Our view here in a nutshell is that we know and we expect social unrest to once again increase and resurface in Colombia. But the main drivers of this unrest are likely to change after going through this coronavirus pandemic, right? So before, where we were talking largely about many different demands from protesters across the board, and it was a large variety and diverse group of key demands that were being made, which made it a very complicated situation for the government to manage. Now it's likely that the economic pressures are going to take the forefront, right? All the unemployment, the rise in poverty, many in the middle class, in the low middle class might start to slip lower into lower income segments. All these things are going to become more and more important, and we believe are going to be the main kind of driver, along with some of those other issues that were still persisting, but these are going to be the main ones to kind of take the forefront of the social unrest and protests and moving forward. However, we look here on the right, we can see that Iván Duque's approval ratings have improved significantly because of his management of the coronavirus pandemic. So going much above those kind of record lows that he had there, near 24% prior to the coronavirus shock, which gives us a sense that Duque might come out of this with a bit of a stronger base that might allow him to not only manage the protests, but maybe also prevent them from re-escalating to the same highs that we saw at the end of 2019. But we do think that is a very real risk, right? And that we are likely to see these protests resurface because the economic pressure is simply becoming too great and will be the main driver of the social unrest moving forward. So I would like to get a sense of how all those on the line are currently seeing the expectation of social unrest and how you expect them to move forward. So do you expect social unrest to resurface in Colombia in the near term, and to what extent? So either yes, we expect more protests than in 2019, yes, but at a lower level, yes, we expect similar protests to 2019, or no, we do not expect significant protests. Great, so I think so far this is fairly aligned with our view that yes, we expect at a lower level than in 2019, but obviously this is a key risk to monitor, as there are many here on the line too that expect to see similar or even greater sum than in 2019. And to shift gears here to something related, obviously, to the protests and how they might evolve, is the government's reform agenda and priorities, right? So here we can see all the structural problems that the government was facing prior to the coronavirus pandemic and how much progress had been made. So still very little on many of these fronts, but now we know the government's going to have to pick and choose and prioritize key reforms moving forward to try to exit the crisis and deal with all the current pressures that we're seeing, right? So on the front of reducing the debt burden, I think the government's likely to take back some kind of fiscal or tax reform, as we mentioned earlier on, and then go back to that pension reform. But that pension reform, as we know, is risky and can trigger social unrest in Colombia, so it's likely to end up being some watered down pension reform on that front. Then with how much unemployment we're currently seeing in the market, how much structural damage we expect to have from the coronavirus pandemic, a labor reform is likely to start moving forward already after the crisis. And then, of course, this is risky as well from the social unrest front, because it is likely to aim to promote more and more flexibility within the labor market to try to drive a recovery there and try to promote more formality after how much greater informality we're likely to see from the result of this crisis at the moment as well. And then the final point here, improving infrastructure, right? And this is all about the government's 4G infrastructure projects, which will try to use to catalyze growth and economic activity once again in Colombia, and getting back to all of those 4G infrastructure projects, making sure that they're moving forward. So we believe these are going to be the main priorities moving after. They create some risks, but are also going to be very important for Colombia's medium to long-term growth trajectory and getting out of this coronavirus pandemic. So if we look at all of these things grouped together, we can look at all of the internal factors we've discussed and see where they would put us from an internal condition standpoint, and all of the external factors we discussed as well, right? So for our scenarios for Colombia, we're assuming that we're going to have an external U-shaped recovery across the board, as appears to be the most likely scenario. And internally in our base case, we believe that Colombia will exit the current situation, and all these other internal factors that we mentioned will create a challenging internal conditions for the country moving forward. We give that a 55% probability, leaving us with our base case here of 33% of a 2022 recovery, right? So Colombia recovering those pre-COVID-19 levels, not until 2022. And then there's kind of the best of the likely scenarios and the worst of the likely scenarios, which I've portrayed here as well, which would be on the positive side, that you have more upbeat internal conditions after and the government being able to manage the post-coronavirus world a bit better from an internal standpoint. And then you have the worst of the likely scenarios, right? And this would be one where we see a lot more damage from the COVID-19 scenario, one where you likely have a large secondary outbreak materialize, and then also risk there on the social unrest front, all those things, which I'll dig into.
Thank you very much, Ramiro. So my take on all of this is that our clients and all of us really will have to deal with an unprecedented level of uncertainty and economic pressures over the next coming months in Colombia. I do have another question for you though. I read an article about consumer confidence increasing month over month in May in Colombia. Of course, we need to be incredibly cautious since March and April were especially damaging. But I was wondering how you thought how this would materialize in terms of contraction, recovery, and potential scenarios for the Colombian economy. And do you see any significant variations across industry verticals?
Sure, those are great questions, Marco, and a great segue into what we have here, which is essentially showing where Colombia stands in terms of its quarterly GDP relative to where we were prior to the coronavirus pandemic, right? So we can see it's clearly there, to your point, that Q2 will be the worst of the contractions that we're expecting, right? And this is because this was the period where we had the most strict social distancing measures and quarantine measures in place that were hurting economic activity the most. And then we start to normalize more and more into Q3 and Q4 as we start to reopen and get more and more into that samba dance that I was mentioning earlier, and leaving us for the year with a negative 6% contraction for 2020 and a 3.9% expansion for 2021, right? But we have to be wary and cautious of looking at that 2021 figure, because really we're just looking at a period of normalization of economic activity here, still well below the points that we were prior to the coronavirus pandemic. So we're comparing this period to a period of sharp contraction. So a lot of that is a statistical effect giving us that 3.9% growth, but we're still well below where we were prior to the coronavirus pandemic. And to your point, Marco, of different industry verticals, and I won't go too deep into detail into all of these industries, but we do expect many of them to continue to struggle for quite some time and be somewhat below or significantly below those pre-COVID-19 levels of activity that they had prior to the crisis, right? So we look at some of these here on retail sectors taking a significant hit, especially those that are more durable goods that will be put on hold for longer following so much structural damage and unemployment, financial pressures that we're seeing at the current moment. There's a few industries here that are kind of in the worst position as we see at the moment in terms of recovery. So that would include hospitality, tourism, and leisure, construction more on the commercial front. And then there's a few outliers too, right? The ones that are doing a little bit better at the moment. It could potentially reflect some of those answers that we saw at the beginning of the presentation of some companies doing better currently. And that could be things like IT and telecom with increased demand for digital services that we've seen so far with all the trend, everyone working from home and the increased need to build out a lot of those digital tools. And then of course, with the retail FMCG as well. So this is fast moving consumer goods where we've seen a bit of an uptick in demand because of all the bulk buying, especially at supermarkets that took place prior to the quarantine. But really across the board, most industries will continue to suffer for quite some time in Colombia because of how much of that structural damage that I was mentioning we expect to linger on for some time and not have that full recovery pre-COVID-19 levels of economic activity until 2022. So here I would like to ask those on the line, when do you expect sales to start to pick up in Colombia? So starting to see some divergences here of either at some point already in Q2, and some in Q3, others in Q4, and others, the majority here, not until 2021. So clearly some industry differences here, kind of aligned with what we were mentioning on the last slide, that there will start to be more and more divergences there in terms of recovery and in terms of a bit of resilience given the current moment and impacts that different industries have felt because of the social distancing measures so far. So the majority here shifting a little bit towards Q4 2020 and 2021. So to give us an idea of how our scenarios are playing out in Colombia and kind of bring this all home together, what we could see play out, what we can see here is the size of the Colombian economy that we expect every year under our base case, our worst of likely scenarios, our best of likely scenarios in green, and then where we were, what trajectory we had prior to the coronavirus shock. So I want to stress here is that in none of our scenarios, even in the upside, do we ever go back to that pre-COVID-19 trajectory that we had because of how much structural economic damage we're seeing, right? So as we mentioned, in our base case, we don't think Colombia will recover those levels of economic activity until 2022. And there are those, that post-2025 scenario, which we'll discuss, and the earliest, which would be a 2021 recovery scenario. But really, this will take some time because of all this structural damage, right? We will have many companies go into bankruptcy that will not be able to, that will not be in the economy to able to invest in the future, having significantly lower investment levels moving forward. Many companies that will exit the crisis in much more challenging financial positions that will not be able to rehire everyone that is being let off at the current moment. We're going to have lower levels of confidence persisting for quite some time and taking some time to normalize back to positive territory until we are fully away from this current shock that we're facing. The government's not going to have the fiscal capacity to simply spend and get us back to that pre-COVID-19 trajectory, right? It's going to be the opposite situation. The government's going to be in a much more challenging fiscal situation coming out of this. We're going to see more and more fiscal consolidation on that front. And then here on the external side, as we mentioned, there's no external exit, unfortunately, from this crisis. We're continuing to see at best modest oil prices and still weak demand because many of these structural problems and pressures that Colombia is facing are global as well for many economies, right? So there's no kind of external way out of this crisis either from an expert standpoint. And then here, a bit more a positive news for Colombia is that we do expect it to have one of the least sharp contractions this year and one of the better recoveries across the region, and kind of leading the region of the main markets. And that goes a lot to say with the current management of the pandemic that we're seeing, which can limit a bit of the structural damage in comparison to some of the other countries. And still Colombia benefits too from having kind of orthodox and strong macroeconomic and monetary fundamentals, right? And here, to close us off with the scenarios, what we can see is the kind of variations that we could see playing out, right? In that best of likely scenarios or the worst of likely scenarios. And this ranges here from as good as a negative 3.5% contraction all the way to what we would see as the worst of likely scenarios, which would be over a 9% contraction, with key variations here across the board, right? In our base case of a negative 6% contraction this year in 2020. And that all has to do with how much structural economic damage do we see from the COVID-19 pandemic? How much job loss do we have by the end of this year in comparison to where we started? When we end up getting that treatment and vaccine, and then all these other domestic factors that we've mentioned too, right? In our base case for those in terms of social unrest, for instance, is that we see protests resurface but do not reach the highs of 2019. On the sovereign credit rating front, that we see the government's new fiscal plan stem any downgrades for now, so allowing Colombia to maintain its investment grade for now. Or we're going to have to start to see more and more talks of the fiscal reforms that the government will present moving forward to maintain its credibility of adjustment moving into the future. And on the structural reform fronts, that will have varied and rocky reforms move forward, right? And some will be more or less beneficial for businesses in Colombia into the future. So shifting the gear a little bit here.
Great, thank you, Ramiro, for that analysis. And so before moving on to my last question, I do want to highlight the Q&A box in the chat. If you have any questions so far, it's very easy to use. Please just message DACA Frontier Webinars in the chat box if you have any questions, and we will try to respond them during the webinar. But Ramiro, given all this uncertainty about Colombia's new normal and the tremendous pressure that firms are currently facing, what should they be doing and thinking about when it comes to their business in Colombia in both the short and the long term?
That's a great question, Marco, and a good segue into what I wanted to mention, which was that we know currently companies in Colombia are going to have to reset all of their priorities, right? Both in the short, medium to long term, as you were asking, Marco. And we know that in the short term, it's all going to be about protecting your employees in the current crisis and business continuity, right? So everything you can be currently doing to promote business continuity with the kind of shocks that we're seeing to firms. In the medium term, it's going to be all about making sure that you have the right calculations and that you're following and prepared for the timing and the strength of the rebound once it starts to materialize, to ensure that you're prepared to capture any kind of upside demand as soon as it starts to happen in Colombia. That will be key in ensuring your teams are aligned and ready to execute on that front. And then the long-term actions, we all know that after going through such a shock like the one we're currently living in, the normal will look entirely different, right? There's going to be many things that will not completely go back to normal. We need to make sure that our business is prepared to win in that new environment, right? So there's a lot of kind of longer-term strategic and key initiatives here that businesses will have to think about across many different fronts to make sure that they're prepared to win in that new environment, right? But a lot of the conversations we've been having lately with clients are in the short-term actions, right? And things that they can do now to promote business continuity and ensure that they can survive and come out of this in the strongest possible way. And a lot of that has to do with protecting cash, right? So this is something that we've been tracking and following and talking a lot to our clients about what they have been doing at the current moment to try to promote and sustain and protect cash at the current moment. Much of this is going to have to do with delaying any kinds of investments and expenditures as much as possible on the OPEX and CAPEX front. So whether it be controlling your personnel costs as appropriate to sustain your business at the moment, renegotiating contracts or payment terms for CAPEX, or on the working capital front, for instance, clearing inventories with hard discounts. But we know this creates a lot of pressures, right, on margins for firms at the current moment, especially for those that are already facing pressures from the depreciated peso at the same time. And then, of course, the last thing here to mention too, which companies could be trying to take advantage of, but this has been less deep in Colombia, and most of these measures have been geared more towards small and medium businesses, but it's all about the government stimulus, right? And making sure that if there's opportunities there for you to tap into any kind of stimulus that might help to currently protect cash at the moment for businesses, right? So I would like to stop here and ask, where has your company concentrated the most as it pertains to protecting cash so far. And there is an option there, by the way, at the bottom that we're doing all of the above as much as we can. So it seemed here a good amount of firms prioritizing we're doing all of the above as much as we can. So that makes a lot of sense. And the other main priority here seems to be mitigating the impact on the top line at the current moment, reducing or containing OPEX as well. Seems to be a popular choice there, but a lot of differences and different strategies that we're currently seeing undertaken by firms to try to protect cash at the current moment. So this kind of concludes the main part of the presentation, but I wanted to shift gears a little bit to some more strategic points moving forward that I think all businesses in Colombia should be thinking about in the current moment. So the first point here, and this is a framework that many of you may be familiar with, which is that PASTEL framework. So making sure that we're preparing for extreme scenarios, right? And extreme outcomes in Colombia. We know that the coronavirus shock was a black swan extreme event, but we know it can trigger other events and other extreme outcomes, and making sure that we're leaving no stones unturned and preparing for those across many different areas, right? So we've touched on the social, political, economic here, many different ways, but ensure that we're preparing for extreme outcomes for these, and to ensure that we're not caught flat-footed if other extreme scenarios materialize following the coronavirus pandemic, right? And there's some examples here across the board of how things could evolve to extremes, which are worth considering in Colombia at the moment across many different areas. The other second point that I wanted to bring was that companies at the moment should ensure that there's strong engagement with stakeholders, right? Not only to currently survive the current moment, but ensure that you're positioning your business to win in that new normal, and making sure that your business is ready to take advantage of those opportunities that will surface in the new normal and shaping that new normal, right? So here, for instance, if you're a company that's benefiting from the working from home trend, if you're a tech company, for instance, you might want to work with the government to promote teleworking regulations to stick after the crisis. You might want to work with the private sector in creating bundles to sell maybe your software or digital solutions together with high-speed internet broadband or office furniture for working from home, all of these things together. You might want to work with academia on promoting research on what are the best ways to stay productive working from home, and then with civil society, maybe educating people on how to not burn out working from home, as we know many people are working a lot more now that they're in this work from home structure, right? And obviously here too, with so many tax changes potentially happening after the crisis, making sure that we're engaging the right stakeholders, the government, industry associations, to make sure that our interests are being represented as those conversations and debates potentially move forward after going through the pandemic. Then here, making sure that there's strong alignment and execution across the board. So we know that there's many changes that are probably happening at the high level of companies, new strategic mandates for growth moving forward, but just because we're making these changes at the top does not always mean they're communicated all the way to the bottom. So making sure that there's a high degree of alignment from top to bottom in our companies, and then also making sure that our incentives are aligned across geographies and functions, and that we have strong resilience in our planning, right? That we're prioritizing that scenario planning, that contingency planning. As we know, as I mentioned, coronavirus was a black swan event, but we know that we're going to get other surprises in the future. So making sure we're prepared for those moving forward. And we know that companies that do these things well have a strong degree of alignment and resilience, tend to outperform the expectations for profitability and market share. And finally here, to close this off on a bit more of an optimistic note, we know that there's going to be new opportunities moving forward in Colombia, and things that we should be thinking about, right? We know that potentially there's opportunities for inorganic growth right now with low valuations and the risk-off environment and the depreciated peso for acquiring local assets. We know that supply chain dynamics can be important if you've identified vulnerabilities in your supply chain, essentially pushing for localization or diversification of your supply chains, rethinking the office space, pushing this digital transformation trend, which we've seen accelerate so much more now than in any other time before, and making sure that you're ready to benefit from that within your own institution and company moving forward. So I'd like to close this off with one final question before we move into Q&A, which is, where do you see the biggest opportunity for your company in Colombia? So most here appear to be either in this accelerate digital transformation or adapt your value proposition to new customer behaviors. I think that is a very important one that we've heard from clients since the beginning of the pandemic as well. And once we started trying to analyze more and more of the behavioral shifts that will take place in the new normal. So those two tend to be the key leading ones: accelerating digital transformation and adapting your value proposition to new customer behaviors in the post-pandemic world. Fantastic. Well, thank you all so much for engaging throughout with these questions. And now we'll open it up to Q&A. So
Great.
I'm seeing what.
If you have any questions, please send them to the GoToWebinar Messenger. It's very easy to use. Just click on the Q&A box on the right-hand side of your screen and type the question. But I believe we have some that have already come through, Ramiro. So quickly, what do you think will happen with the next election in Colombia?
That's a great question. Definitely not an easy one to answer. So as we look to the next elections, we know much will change because of the current coronavirus situation, right? Many of those political dynamics. I think that what is likely to happen is that you will be able, after such an economic shock this year, that gives a strong platform for a leftist kind of populist to build their platform on. And I think the right in Colombia will remain tied to many of those agenda items of its past, right? So focus on the peace process, changes to the special jurisdiction for peace, which may not resonate as much to the broad public after the current economic pressures that we're seeing, which would give more and more rise to someone on the far left, right? So I think we will continue to see more and more polarization moving forward, but I think the end result will likely be a centrist left candidate winning the next election. So someone like Sergio Fajardo in Colombia, for instance, in the second round runoff there. But there's obviously key things to monitor, but I think that the kind of economic pressures that we're currently seeing will end up aiding more and more to more polarization, leading to those elections, and potentially for another kind of populist candidate also to build a strong left population. But we do think we will get some kind of pragmatic center left at the end. As I mentioned, there's someone like Sergio Fajardo in 2022. Then we have another question of how long will it take employment to be recovered in Colombia? I think this is also a great question. I would say I don't think we're going to get to those pre-COVID-19 levels until after 2022, potentially as late as 2023, because we are seeing so much job destruction at the moment. Of course, we need to continue to monitor to see how much of this ends up coming back, but we know that not all of it will come back. So that is a key point that we have in our scenarios of how much job destruction we have at the end of this year relative to the beginning. And then that will give us a good point to be able to judge how much is left to make up. But I think what will be left to make up is likely going to take until 2023 or so. All right, we have another question here. Do you believe that agriculture can be an area that contributes in the future about 10% of GDP? I think that this is a great question, right? We've seen Colombia's need for economic diversification pick up more and more throughout the years, right? Since the end of the commodity boom and oil price, the first oil price crash, and that exposed a lot of vulnerabilities in the economic model. Now, once again, dealing with the coronavirus shock and oil price shock, we're seeing once again a lot of that vulnerability and need for diversification. So it is likely going to be a priority of the government to continue to promote diversification of Colombia's exports, especially, which could give rise to more dominance of other important export sectors like the agricultural sector moving forward. All right, and we will make sure we did not get to your question, that we will answer it and get it back to you within 24 hours of this call.
Thank you, Ramiro. And so do you have any final remarks before we conclude today's webinar?
Thanks, Marco. No, I think that obviously this is a bit of a pessimistic outlook, but I do think it's realistic and one that firms need to be ensuring that they're preparing for moving forward. But I also do want to stress on that end note that we had there, that there will be new opportunities surfacing because of this, and businesses need to make sure that they're adapting and ready to win in that new normal, and currently taking advantage of any new opportunities that are surfacing so that they are best positioned to win in that new normal.
Terrific. Thank you so much for your time and insights, Ramiro. This has been extremely helpful to understand the current situation. As a reminder, if there are any questions that we were unable to answer on the line today, we will follow up with responses via email through your relationship manager within the next 24 hours. Thank you again to everyone for joining us. We hope you have a wonderful rest of the week, and we look forward to speaking with you again soon. Please stay well and stay safe. All the best from us at Ducker Frontier.
Thank you all so much, and thank you, Marco.